There's a hidden way Canadians can potentially save more on their taxes. It's called a spousal RRSP, or at least it's contributing to your spouse's RRSP. If you're looking for the basics of a registered retirement savings plan in general, I've made a few videos on it in the past. Check this one out if you're interested. This video is explaining the basics of contributing to your spouse's RRSP to save tax. This applies to married couples or common law couples only. Before I get started, if you're a beginner or new to Canadian finance, I've created a course for you called Canadian Finance Pro. It's 8 hours long, over 60 videos where I discuss budgeting, credit, inflation, managing debt, tax, where to invest, and how to invest for beginners. This video is just a snippet of what I'll include in the course. And there's a new added bonus with every purchase. I'll do a 1-hour one-on-one Zoom chat with every new member. A spousal RRSP is basically when one person opens an account contributing to the other person's RRSP. Why would anyone do this? Well, the ideal scenario is if one spouse is a high earner and high saver, while the other is a low earner and low saver. Ideally, you want each spouse to have a similar amount in retirement savings. More on this later. The benefits include income splitting and tax planning. If your spouse has $3 million in retirement and you have zero, when you withdraw, let's say $120,000 to live off of, you'll pay more tax than if you each withdrew $60,000. Remember, RRSP withdrawals are not tax-free. It is your retirement account and you will be taxed on any withdrawals. It is considered income. Take a look at this example. $120,000 earned by one person means you'll pay $34,000 in tax and you'll end up with $85,000 cash after tax. However, if a couple earns $60,000 each, so $120,000 total, you'll pay $27,000 in tax and you'll have a combined $92,000 in cash after tax. So it's almost $7,000 extra. This is what I mean when I say tax planning or income splitting. Income tax in Canada is progressive, so the more you make, the more you pay. So when you retire, you want each spouse to withdraw roughly the same amount to make sure you pay the least in tax when you need the money, when you need the cash the most. There is some nuance to keep in mind when doing this. Contributing to your spouse's RRSP uses up your contribution room. If you've used up all your room already, you can't claim an additional amount for contributing to your spouse's RRSP. These contributions won't affect your spouse's contribution room. It's your own. You can contribute until your spouse turns 71. If you're older or younger, it doesn't matter. If it's your spouse's age that determines if you can still contribute, that age is 71. There are some drawbacks, such as loss of control. If you don't trust your spouse to make decisions or investments, this is probably a bad idea. Even though you contributed your own money to their RRSP, it's not yours anymore, it's theirs, and they can lose it all to Dogecoin or Shiba coin if they want to. There are penalties or attribution rules if your spouse withdraws too early. Since people were trying to scam the system, the CRA added a little fix. If you contribute to your spouse's RRSP, you get a tax deduction. That's great, very nice. If your spouse withdraws that amount, any amount deposited in the last 2 years, you will get taxed on it, eliminating the benefit. Anytime after 2 years, they can withdraw and it'll be taxed in their hands. So just be aware of the timing. If you deposit now, they have to wait until 2 years before they withdraw or you get taxed on it. Keep in mind, you can have both a spousal RRSP and a personal RRSP. You can have any number of RRSP accounts if you want. You can have 10 if you want. Not sure why you'd want to do that, but just keep track of your own contribution room and you'll be fine. It's the total number of amount contributed personally. It's not the number of accounts. Some frequently asked questions I get: can I contribute to my own spousal RRSP? The answer is no. You can contribute to your personal, but not to your own spousal. That's for the other person to contribute. Who claims the deduction? Obviously, you're using an RRSP for the tax deduction. If you put in $30,000, it'll reduce your own tax payable by a decent amount. If you contribute to your spouse's RRSP, you get the deduction. Ideally, the higher earner at the higher tax bracket is contributing, therefore getting a larger tax deduction and a larger tax benefit when you eventually retire. What if I used up all my contribution room? My 2023 contribution room was $10,000 and I used it all up for my personal RRSP. Can I still contribute to my spousal RRSP? The answer is no. You used up all your personal room. You should have planned this out in advance. There are some more complications to this example, but it's not for this video. This video is just meant for beginners. That's it for this video. I'll be creating a few more tax-related videos probably in the next few weeks as we head towards the end of the year. Thanks for watching. Let me know if you have any questions and tune into the next one.